Hello and welcome. Today we're exploring the hidden energy within your home, your equity. Equity is the difference between your home's value and what you owe on your mortgage. It's a testament to your hard work and a resource you can use to build your dreams. Many are drawn to real estate investing, seeking security and prosperity for loved ones, but the first step, finding funds, can feel daunting. The answer may be right where you are. Your home holds a financial treasure chest. Tapping into your home's equity can ignite your investment journey. Imagine using this stored wealth to purchase another property, generating income and growth. This isn't just a transaction, it's expanding the abundance you've built. Today, we'll walk through 2 ways to access your home equity, a home equity line of credit, and a home equity investment. Both are powerful tools, each with unique benefits and considerations. There's no single right path. The best choice depends on your comfort with risk and your long-term vision. Our goal is to give you clarity and confidence. Let's discover how your home can help you build a brighter future. We'll explore how to unlock this treasure and use it wisely. By the end, you'll feel empowered to take your next step. Let's begin. Let's talk about the Home Equity Line of Credit, or HELOC. A HELOC is a revolving line of credit secured by your home's equity like a credit card, but with your house as collateral. The lender offers a credit limit based on your home's value and mortgage balance. You can draw funds as needed, paying interest only on what you use. Typically, you have a draw period of about 10 years. During this time, you access funds for investments, renovations, or emergencies. For example, if your home is worth $500,000, 0 cents, and you owe $200,000, 0 cents, you might get a HELOC for up to $225,000, 0 cents. If you need $50,000, 0 cents. For a down payment, you draw only that amount and pay interest on it. After the draw period, the repayment period begins, usually 15 to 20 years, where you pay back principal and interest. HELOCs often have variable interest rates, so payments can fluctuate. This flexibility is a major advantage, but it requires careful planning. You retain full ownership of your home's appreciation. A HELOC is ideal for those who want control and flexibility. But remember, your home is on the line, so use this tool wisely. Stay mindful of interest rate changes and your ability to repay. Next, let's explore another path, the home equity investment. Now, let's look at the home equity investment, or HEI. Unlike a HELOC, an HEI is a partnership with an investment company. You receive a lump sum of cash today in exchange for sharing a portion of your home's future appreciation. There are no monthly payments or interest charges. For example, if your home is worth $500,000, 0 cents. You might receive $100,000, 0 cents now, agreeing to share 40% of your home's future value when you. This can be a relief for those who want to avoid new monthly bills. The HEI company shares in both the upside and downside of your home's value. At the end of the term, or when you sell, the agreement is settled. This path is best for those comfortable sharing future gains for immediate cash and peace of mind. It's a co-creative venture, no debt but shared rewards. Let's compare these 2 options side by side. Let's compare HELOCs and HEIs so you can choose what fits you best. With a HELOC, you get a flexible line of credit draw, what you need when you need it. With an HEI, you receive a lump sum upfront, no monthly payments, but you share future appreciation. HELOCs require monthly payments, often starting as interest only, then principal and interest. HEIs have no monthly payments. Repayment happens when you sell or the term ends. HELOCs carry the risk of rising interest rates and require steady income to manage payments. If you can't pay, you risk foreclosure. HEIs share the risk if your home's value drops. The company's share drops too. But you give up a portion of your future gains. HELOCs are debt instruments. You borrow and pay back with interest but keep all future appreciation. HEIs are equity instruments. You sell a share of your home's future value for cash now. The choice is between flexibility and control versus peace of mind and partnership. Consider your risk tolerance, income stability, and long-term goals. Each path has trade-offs. Choose what aligns with your vision. Next, let's look at the blessings and burdens of each option. Understanding these will help you make a wise decision. Let's start with the HELOC. A HELOC offers flexibility. You draw funds as needed and retain all your home's future appreciation. It's ideal for investors who want control and the ability to act quickly. Interest paid on a HELOC may be tax deductible if used for investment properties. Consult a tax advisor. Setup costs are often low, making it accessible. However, variable interest rates can increase your payments unexpectedly. If you can make payments, you risk losing your home. Discipline is essential. Financialization. Avoid using funds for non-investment purposes. A HELOC is best for those with steady income and a clear repayment plan. It's a powerful tool but requires responsibility. Weigh the risks and rewards carefully. Next, let's explore the light and shadow of a home equity investment. Understanding both will help you choose wisely. Let's continue. The greatest benefit of an HEI is no monthly payments, freeing up your cash flow. The HEI company shares in market risk. If your home's value drops, their share drops too. It's accessible for those with less predictable income or lower credit scores. The main drawback, you give up a portion of your home's future appreciation, which could be significant if the market rises. HEI contracts can be complex. Read every detail and understand the terms. Some agreements may require a buyout if you don't want to sell. An HEI is best for those who value peace of mind over maximum profit. Now, let's hear from real-world investors and experts. Experts offer valuable perspectives on these tools. Real estate investor Sarah Chen calls her HELOC an opportunity fund. She uses it for quick investments and keeps all her home's appreciation. For example, she drew $70,000, 0 cents for a property flip, repaid it after selling, and her HELOC was ready for the next deal. Financial planner David Miles recommends HEIs for retirees or those with irregular income. They can invest without new monthly payments. Mark and Lisa, in their late 50s, used an HEI to buy an apartment building, gaining income without a new loan payment. They were happy to share future appreciation for immediate peace of mind. The right tool depends on your situation and goals. Listen to those who've walked these paths. Their stories can guide your decision. Now, let's talk about making the right choice for you. Trust your intuition and your unique needs. How do you choose? Start by clarifying your intention. If you want flexibility and control and can manage monthly payments, a HELOC may be right for you. If you prefer no new monthly bills and are comfortable sharing future gains, consider an HEI. There's no universal answer, only what fits your journey now. Write down your pros and cons and feel which option aligns with your vision. Trust your intuition. It's your best guide. Make your decision with both wisdom and heart. Your home's equity can open new doors. Choose the path that feels right. As we close, remember, your home is more than an asset, it's a foundation for your dreams. Using your equity is a courageous step toward abundance. Whether you choose a HELOC or an AA, approach the decision with care and gratitude. Consult trusted advisors and read every agreement thoroughly. Meditate on your choice and seek guidance. The right path will feel peaceful and aligned with your goals. For those who want control and future profit, a HELOC may be best. For those who value cash flow and peace of mind, an HEI offers support. Both paths can lead to prosperity and security. Go forward with gratitude and confidence. May your investment journey be blessed with clarity, success, joy.